Do you know how many asset management companies do we have in India? Well, there are more than 40 asset management companies in India. And what is the total amount of money they manage? Well, as of June 2021, the AMCs manages a total amount of 33,44,932 crore rupees. And which is the largest asset management company in India? Let's have a look at the breakup by AUM, that is asset under management. So SBI Fund House is the largest AMC in India with an average AUM of rupees 5.24 lakh crore. It is followed with ICICI Prudential AMC at number 2 position with AUM of 4.29 lakh crore rupees. Then HDFC AMC is number 3 with an average AUM of rupees 4.18 lakh crore rupees. It is followed with Aditya Birla, then Kotak Mahindra, then Nippon Life, then Axis, UTI and IDFC. These 9 AMCs cater to almost 80% of total AUM in India. Hello everyone, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. In this video, I will compare the stocks in the mutual fund sector in India. Mutual funds in India are still in their nascent stage. Mutual fund penetration in terms of AUM to GDP in India is around 15%, which is significantly lower than the world average of 63% and much lower than many developed economies such as US that has an AUM to GDP ratio of 120%. Then Canada has an AUM to GDP of 81%, France has AUM to GDP of 80% and UK has AUM to GDP of 67%. Even the emerging economies such as Brazil has an AUM to GDP of 68%. For simplicity, just understand that the US has an AUM of around $25 trillion, whereas the Indian mutual fund industry is just $0.4 trillion. So the US mutual fund industry is more than 60 times bigger than the Indian mutual fund industry. Now just imagine the kind of growth we can expect in the mutual fund industry in India. And when the mutual fund industry would grow, it would benefit the asset management companies. Hence, in this video, I have compared the top 3 public listed asset management companies in India. That is HDFC AMC, UTI AMC and Nippon AMC. We'll start by understanding the key growth drivers for the mutual fund industry and then we'll compare these companies based on financial parameters like your market cap, 5-year stock return, revenue size, 5-year revenue growth, profit size, 5-year profit growth, operating margin, ROE, ROCE and debt to equity. Then we'll look at the shareholding pattern in each company and then we'll do the valuation analysis to understand among all 3 companies which company is trading at attractive valuation. Finally, we would conclude the best company among all these 3 companies. But before we begin, this video is only for educational purpose and if you want to learn how to pick quality stock, then you can explore my complete course on money management. Alright, let's get started. Number 1 growth driver is India is one of the fastest growing economy. India is poised to become the 3rd largest economy after US and China in the next few years. And when the economy will grow, the investors would invest more money and that would result in growth of the mutual fund industry. Then number 2 growth driver is shift towards digital economy. Earlier, people used to transact in cash. However, due to strong focus on digitization, people have started online transaction. And this has resulted in more inflow of money in online investment options like your mutual funds. Then 3rd driver is investment shift from traditional instrument to Indian economy. Earlier people used to invest in traditional options like your FD, PF, insurance, etc. But there's a radical shift in investment patterns as the traditional investment options are not even able to beat the inflation. Hence, the young generation now like to invest money in mutual funds. Number 4 driver is rising income and awareness level. Today, the young generation has become aware about the importance of investment in Indian economy. Moreover, there is a rise in income levels and that is going to drive the growth in mutual fund industry. And number 5 driver is ease of investment. A few years ago, it was a pain to invest in mutual funds. But today, due to multiple fintech firms, investment in mutual fund is a matter of few clicks. This has created a lot of convenience for investors and hence we have seen a surge in total number of mutual fund investors. Moreover, due to rising internet penetration and smartphone usage, there is a huge growth in the mutual fund sector. Number 6 growth driver is products catering to different risk versus return profile. Today you have multiple mutual fund categories and multiple products within each category catering to various risk versus return profiles. On top of that, there are various new mutual funds being launched frequently. This would again drive the growth of mutual fund sector. So clearly the future growth prospect of mutual fund industry in India is looking very promising. If you look at the market cap, HDFC AMC has a market cap of rupees 69,000 crore, UTI AMC has a market cap of rupees 15,000 crore and Nippon AMC has a market cap of rupees 27,000 crore. So in terms of market cap, HDFC is number 1, followed with Nippon at number 2 position and UTI AMC is at number 3 position. If you look at the stock return, all the 3 AMCs have recently launched their IPOs. HDFC AMC had its IPO in August 2018 and it was opened at Rs 1748 and currently it is trading at Rs 3243. So it has given around 85% return in last 3 years since IPO. UTI AMC had its IPO last year in October 2020 and it was opened at Rs 500 and within 1 year the stock has jumped 133% to current levels of Rs 1173. Nippon AMC had its IPO in November 17 and since then the stock has given around 54% return and currently trading at Rs 438. Earlier Nippon India Mutual Fund was owned by Anil Ambani Reliance Group, but later in October 2019 it was acquired by Japanese life insurance company Nippon Life Insurance and it was renamed to Nippon Life India AMC. Since then the stock has performed well. However, since none of the stock have completed 5 years, we can't compare the stock returns. If you look at the revenue size, HDFC AMC revenues have grown from Rs 1,490 crore to currently at Rs 2,194 crore. UTI AMC revenues have grown from Rs 750 crore to currently at Rs 1,169 crore. Nippon AMC revenues have grown from Rs 1,311 crore to currently at Rs 1,419 crore. So in terms of revenue size, HDFC AMC is number 1, followed with Nippon AMC at number 2 position and then UTI AMC at number 3 position. If you look at the CAGR growth in revenue in last 5 years, HDFC AMC revenues have grown at a CAGR of 8%. UTI AMC revenues have grown at a CAGR of 9.3% and Nippon AMC revenues have grown at a CAGR of 1.6%. So UTI AMC is leading the revenue growth at number 1 position. It is followed with HDFC AMC at number 2 position and then Nippon AMC at number 3 position. If you look at the profit size, HDFC AMC profits have grown from Rs 478 crore to currently at Rs 1326 crore. UTI AMC profits have grown from 232 crore to currently at 494 crore. And Nippon AMC profits have grown from 396 crore to currently at Rs 680 crore. So in terms of profit size, HDFC AMC is number 1, followed with Nippon AMC and third position is of UTI AMC. If you look at the CAGR growth in profit in last 5 years, HDFC AMC profits have grown at a CAGR of 22.6%, UTI AMC profits have grown at a CAGR of 16.3%, and Nippon AMC profits have grown at a CAGR of 11.4%. So HDFC AMC is leading the profit growth at number 1 position. It is followed with UTI AMC at number 2 position and then Nippon AMC at number 3 position. If you look at the operating margin, HDFC AMC operating margins have increased from 48% to currently at 82%. That's an exceptional margin. UTI AMC operating margins have increased from 47% to currently at 53%. And Nippon AMC operating margins have increased from 40% to currently at 64%. So all 3 companies have a high operating margin. Although HDFC AMC is at number 1 position, Nippon AMC is at number 2 position and UTI AMC is at number 3 position. If you look at the return on equity, HDFC AMC is on the lower side and the latest ROE for FY21 is 13.08%. UTI AMC latest ROE for FY21 is 15.3% and Nippon AMC is consistently leading with latest ROE of 21.94%. So in terms of return on equity, Nippon AMC is number 1 position, UTI AMC is at number 2 position and HDFC AMC is at number 3 position. If you look at the return on capital employed, HDFC AMC has latest ROCE of 17.3%, UTI AMC latest ROCE for FY21 is 18.94% and Nippon AMC is consistently leading with latest ROCE of 28.4%. So in terms of return on capital employed, Nippon AMC is at number 1 position, UTI AMC is at number 2 position and HDFC AMC is at number 3 position. If you look at the debt to equity, all three companies are completely debt free, which is great. If you look at the shareholding, HDFC promoters are HDFC Limited and Standard Life Investment, and together they have 73.88% share in the company. UTI AMC doesn't have a direct promoter but has a set of sponsors including Punjab National Bank, State Bank of India, LIC and Bank of Baroda that collectively holds around 45% share in the company. The Nippon AMC promoter is a Japanese company Nippon Life Insurance that acquired Reliance AMC in 2019 and currently hold 74.23% shareholding. As far as valuation is concerned, HDFC AMC is currently trading at P ratio of 51, UTI AMC is trading at P ratio of 27 and Nippon Life AMC is trading at P of 38. So clearly UTI AMC is the least valued stock among all three options. Hence UTI is at number 1, it is followed with Nippon Life AMC at number 2 and HDFC AMC at number 3 position. Now let's quickly summarize our analysis. In terms of market cap, HDFC AMC is number 1, followed with Nippon AMC at number 2 position and UTI AMC at number 3 position. In terms of revenue size, HDFC AMC is number 1, followed with Nippon AMC at number 2 position, then UTI AMC at number 3 position. In terms of 5-year revenue growth, UTI AMC is leading at number 1 position, it is followed with HDFC AMC at number 2 position, then Nippon AMC at number 3 position. In terms of profit size, HDFC AMC is number 1, followed with Nippon AMC at number 2 position, then UTI AMC at number 3 position. In terms of 5-year profit growth, HDFC AMC is leading the profit growth at number 1 position, it is followed with UTI AMC at number 2 position, then Nippon AMC at number 3 position. Then in terms of operating margin, HDFC AMC is at number 1 position, Nippon AMC is at number 2 and UTI AMC is at number 3 position. In terms of return on equity, Nippon AMC is at number 1 position, UTI AMC is at number 2 position and HDFC AMC is at number 3 position. In terms of return on capital employed, Nippon AMC is at number 1 position, UTI AMC at number 2 and HDFC AMC is at number 3 position. In terms of debt to equity, all three companies are completely debt free. Finally, in terms of valuation, UTI AMC has the lowest valuation and it is at number 1 position. It is followed with Nippon Life AMC at number 2 position and HDFC AMC at number 3 position. Now overall, all three companies are looking fundamentally strong. All three companies are zero debt companies and have a strong foothold in the AMC space in India. However, there is no clear leader among them. HDFC AMC is leading in market cap, revenue, profit size and profit growth in 5 years, but it is at 3rd position in terms of ROE, ROCE and valuation. Whereas UTI doesn't have a direct promoter base and it is only leading in revenue growth. Although from valuation point of view, UTI is looking very attractive. On the other side, Nippon AMC is the leader in ROE and ROCE, although it is lagging in 5-year profit growth. But after the 75% acquisition of Japanese firm Nippon Life Insurance, it is growing quickly. As far as valuation is concerned, Nippon Life AMC valuation is between HDFC AMC and UTI AMC. So it is a difficult call, but if you ask me to pick one stock, I would choose Nippon Life India AMC. It has recently launched a lot of products in the mutual fund category and it is also leading the ETF sector with products like your Nifty Bees and Nifty Junior. Some of the Nippon mutual funds are among the top mutual funds in the category. Hence, I would go with Nippon. Now you tell me which would be your pick and which companies you want me to compare next. I will see you with another video. Till then, take care.